Hi, this is Mike Hoffner and Dan Sturm with McKonly Asbury, and we're glad to have you joining us for this brief overview of the revenue standard that was finalized by the Financial Accounting Standards Board. Our focus today is not to educate you on the details. Rather, we want to highlight the things we think you need to be considering regarding implementation and the impact that it will most certainly have on our construction contractor clients. Before jumping into our recommendations on how you should approach the next 2 years to ensure that you're ready for the transition, let's take just a brief moment to review the new standard. Keep in mind this is extremely high level, and if you're interested, we would enjoy the chance to meet and talk face-to-face on a deeper dive into the technical details. First, it's important to understand that the intent of this standard, issued in 2014, is to replace all of the numerous industry-specific standards, pronouncements, and interpretations that were out there with one single piece of literature that will apply to all entities, no matter the industry. While conceptually a great idea, it resulted in removing the traditional contractor model of percentage of completion that we've been using since SOP 81.1 and replacing it with a broad principles-based model that will take some time for us to ensure we do correctly. In many cases, results will not change dramatically, but they'll definitely change. The standard is currently effective for periods beginning after 12/15/2018, so calendar 2019. But bear in mind, comparative statements will mean we need to understand what 18 will look like under this standard as well.
Thanks for that brief overview, Mike. Under this new standard, there's actually a 5-step revenue recognition model that all industries must follow. This is where you're going to start hearing some of the new terminology associated with the new revenue recognition standard. The first step is identify the contract with the customer. Second step, identify the performance obligations within the contract. This is probably the biggest point in the new model and the point getting the most attention as to where these performance obligations come in. The third step, determine the transaction price. Next, allocate the transaction price to the various performance obligations. And lastly, recognize revenue. As Mike has already pointed out, the standard is not effective for a couple more years. However, there are certain steps you should be considering and taking in 2017. First thing you'll want to do is identify your team. It may just be people from finance, but quite honestly, in the organizations and industries most heavily impacted, may include people from various parts of the organization, including IT, operations, and finance. You also want to set up an overall timeline for implementation. This will help you set goals, target dates, to make sure you're ready to go in a couple years once the standard becomes effective. You will want to make sure the key individuals on your implementation teams at least understand the basics of the new standard, so there's a go-to resource within your organization to know generally what the impacts are going to be on your organization. Maybe not to a specific dollar amount, but at least understand the basics to have those discussions. If you've not already done so, this is also the opportunity to start listing and documenting all your various revenue streams. Whether that be revenue from heavy highway, commercial building construction, or some other type of revenue. You'll want to make sure that you're considering every type of revenue stream and the impact from the new standard. You also want to compile a list of all your contract types. So you may operate in only fixed-priced contracts, but more likely than not, you also have time and material contracts, cost-plus contracts, and maybe some other types of contracts mixed in there as well. So you'll want to understand and compile a list of those. Once you've identified your revenue streams and contract types, you can begin to determine the impact from the new revenue standard.
Thanks, Dan. That list is a great start. There's tremendous value in taking time to understand the details of your revenue streams and types of contracts even without a transition in accounting standards, but it's even more significant to do so now. In that light, we should take some time to model out how the standard will or could look different in some of your existing contracts. Pick a sample, take some time to understand what needs to change and what it'll look like. Also, given the reliance on our systems in calculating revenues, billings in excess, costs in excess, and other related accounts, we do need to understand what steps our software vendors taking to facilitate the implementation of the new standard, not just when it goes live, but also in understanding what the transition looks like during the crossover periods. Finally, you should plan to train all your stakeholders in the process, not just in accounting, but also the folks that prepare bids, prepare contracts, deal with subcontracts, and of course your external users. And on that note with external users, make sure that you understand what the document that you will provide to the bank and the bonding company is going to look like. Those disclosures will change, and we should evaluate that ahead of time. Our last slide in this discussion just highlights two of the many items that will need to be thought of differently in the new paradigm of revenue recognition. We won't hit them in detail, but I'll just use the opportunity to repeat one of the first things Dan said in your to-do list for 2017. Understand the basics of the standard. Once you read and note what's new, you'll be in a much better position to do all of the things necessary to ensure you and your colleagues are ready to go in 2019.
If you have questions on the new standard or need assistance with implementation, please contact the construction experts at McKonly Asbury. We'll be glad to help. Thank you for taking time to listen to us today. Have a great day.